Well, hello, everyone. Thank you for joining us today for our Ask a VC series. It's very active during August because I figure the people are not quite as busy then, but actually, I think I'm wrong this year because everybody I know is racing around trying to get things done, including yours truly. So I'd like to thank everyone for being here today and listening to our guest speaker today, who is Urvi. And I will try not to mispronounce her name. Urvi, please tell us your full name.
Urvashi Bhatnagar.
Very nice. Very nice. Okay. We're going to get to meet her in a moment, but I'd like to just say a few words about our show, our YouTube channel, our events, our online series, and our newsletter and our circle membership, and our supporter from Hong Kong. Thank you very much, Invest Hong Kong. So today we have Irby joining us from Virginia. Northern Virginia. She's a Yale University graduate and MBA, Yale University. She spent some time in India working on healthcare initiatives. Then she started this fund, Good Science Fund, which has a great name. I like it a lot, Good Science Fund, which she launched in 2024. And she's a co-author of the Sustainability Scorecard. She has a doctorate in physical therapy from Boston University. And that's a little bit about Irvi, and we're going to get into a chat with her. But before we do that, I want to announce our next events. Next week, we're in Hong Kong, well, virtually, with a VC, Wayne Xiong, who has a new fund also in physical AI. So I hope you all tune in for that. That's at 4 p.m., our selected time, 4 p.m. Pacific time. And then in New York, we have live from New York City, Silicon Dragon and the China Investment Group. We have two speakers for that. The guy who is behind Segway and Ninebot, the robotic lawnmowers and the robotic scooters. And then we have Vijay Vaiswaran from the Council on Foreign Relations. He's their new director, working on energy, security, and climate change. That's going to be really interesting. That's live in New York, September 9, 5 p.m. Then in San Francisco, we have a brunch coming up. And during, well, it's right after SF Tech Week, but it's a breakfast event during TechCrunch Disrupt. So all these things are coming up, and I welcome you to join us. Last week we had on a biotech investor from San Diego. That recording is online at our YouTube channel, and you can check it out there. I'm not going to play it right now, but you can check it out. So I'm going to stop the share now. It sounds a little scary. Stop the share, but actually it's not scary at all. And we have our guest here today to welcome everybody and say hello.
Hi, everybody. Great to meet you. And thank you for everybody watching online. And I really appreciate the engagement.
Of course. So tell us what led you to create the Good Science Fund.
So I had a background in business transformation activities and M&A for quite a while. I started out as a clinical provider, and I think essentially my career gave me really great insight into changes that were required on the ground in our care delivery system. And then as I went on to the larger organizations and helping Fortune 500s with their organizational goals in health broadly, I think I got a really great perspective of the changes that were required at the 50,000 foot level in order to impact the one patient on the ground. And essentially, I just came away with the thought that as long as we keep our eye on the patient at the 50,000 foot level, we were going to be just fine. And sometimes it's very challenging to do, although all the stakeholders tend to have all the right intentions, it's
Mhm.
still very challenging to do.
Mhm.
So through my career, while I progressed in my, career, my I was personally more drawn earlier and earlier to a little bit more of the seed stage phase of a company, where that's where some of the biggest markups live. That's really where you have a degree of influence in sort of co-building or supporting entrepreneurs as they're scaling their companies. Um, and so in 2024, we launched the Good Science Fund in order to support those entrepreneurs that will hopefully go on to become, massive companies that will redesign the future.
Well, tell us about some of the companies you've invested in or the ideas you've invested in.
Yeah, absolutely. So we've invested in everything between precision neuropsychology to AI to rare diseases. We've taken a number of bets in our initial fund across the board. I like to say that we invest in health and climate, and we're really looking for solutions that are between categories. And I think of us achieving the thesis as a tapestry. No one solution or no one company by itself tells the entire narrative of what this fund is about and what we're hoping to achieve. I think everything in concert speaks broadly to the thesis. And so, to that end, we're looking forward to wrapping up our initial fund and finishing the deployment phase of it. We're really in the initial phase of launching the next one. So, this is an exciting
Already?
here. Yeah. So, it's an exciting time here at the Good Science Fund. We have a durable thesis, so we just intend to raise larger and larger funds and hopefully just invest in more categories.
I see. So how large is the fund that you have right now?
So our initial fund is probably going to end up at around a little bit north of $4 million, and then we'll obviously chase a larger number, for the next one.
Okay.
And we're yet to declare a target for that, but we're in the early phase, so let's see how this goes.
Okay. Now, is this family office money or is it yeah, from Yale Ventures or something? Because I know you went to Yale, you were active in Yale Ventures in New Haven. You spoke there, and you're obviously a Yale University graduate too. So did Yale help you out at all with Yale Ventures?
Yale is amazing. So yes, we definitely partner with Yale. We've received some really awesome deal flow from them. So Yale University and their associated Climate Haven Accelerator comes up with really strong deal flow, and we're really thrilled with that partnership. Your Yale Ventures broadly does incredible work. So yes, Yale's been very helpful all around. In fact, one of my previous professors of finance, Todd Court, is one of the leading thinkers in the impact space and communicating stakeholder value, quantifying risk is one of his primary interests. And so he's joined us at the fund as well as a venture partner. So we have a pretty strong Yale footprint here. That said, we haven't raised any capital from Yale at this time. We're very early. So for our initial fund, most of our capital came from high net worth and ultra high net worth individuals and angels. And for the next fund, we're targeting family offices.
Okay, yeah, I know family offices, there's several events around family offices and they are looking for new avenues of investing. So it's probably a good move. And if you haven't checked out some of the family office events that are happening, you probably should.
Yeah.
Around Southampton, around Newport, a
Right.
lot of activity, and
Yep.
they're popular. So I've covered much more around the venture capital scene, and not so much family offices, but I know family offices is becoming much more of an influence in early stage investing. So tell us a little bit about your India experience. I saw that you had worked with on some healthcare initiatives and education initiatives in India before you started your fund, and you were working in some very poor areas of India. Can you just tell us about your experiences doing that?
Yeah, absolutely. So I actually got my undergrad from India. I was raised here. I grew up. I completed my undergrad in India and ended up doing an internship at the St. Stephen's Hospital, which is a fairly large health system in
Okay,
the New Delhi region,
okay,
with really incredible and well-known orthopedic surgeon who was called out by Bill Gates for being a hero, a Gates hero for his work
Oh,
in polio and
uh-huh.
uh, mainly polio. His work is in reconstructive surgery, and so he's obviously impacted a number of diagnoses. But his main work was post-polio syndrome and polio. So we worked on really large-scale public health initiatives to bring, large number of populations affected by either polio or post-polio syndrome to the hospital and really impact the social determinants that, at a system level, really have a determining factor on patient outcomes. And I think that was one of my earliest experiences in understanding that while patient care and everything that a health system or an individual provider provides is incredibly important to their care and to their long-term outcomes, there are other factors at play that really determine this person's interaction with their environment and their long-term achievement of their goals. So, so that's, I think, where my interest in population health was initiated. And so, of course, as I progressed in my career, I've obviously gone from clinical care to the 50,000 foot level, as I like to say. But that's some of the training that I received on the ground from really incredible individuals.
So how long were you doing this on the ground kind of work in India?
So I was in public health for about 6 to 9 months, and then after that, I was in clinical care in outpatient orthopedics for about 5 to 6 years before going on to my MBA.
Oh, so coming back to the US to get your MBA. Is that what you at Yale?
Yeah, well, I mean, I came back and was working in one of my first roles after graduation. And I received my doctorate in physical therapy while working at Boston University.
Nice.
And then I went on to my MBA.
Wow, you sound like a super achiever.
I don't know about that, but my brother says I like homework.
Oh, you like homework? Okay, that's an interesting way to put it, and count on a brother to put it that way.
Mm.
I have a brother too. Okay. Anyhow, let's go move on. What's the biggest problem you're trying to solve?
I think the overarching theme of everything I do is really to demonstrate at a fund level that economic upside and social and environmental and health impact cannot be uncoupled from each other. And so we don't obviously like when we diligence companies, we're obviously looking for, something that makes a lot of strategic sense for the fund. We're looking for companies that have a real great potential. They have the legs to be very financially viable and return capital, obviously, just like any other venture fund. So that's a really important pillar for us, the economic side and the ability of a certain company to demonstrate that they will impact the wallet, whether it's the wallet of the investor or the wallet of the eventual end consumer that's going to leverage those solutions. So that's an equally important diligence factor as the impact side of the equation.
Okay, so climate change or healthcare, which one is the bigger problem?
We like to think of those together, and that's why so I use the term planetary health really often for that reason, because our human health is impacted by, factors in our environment, whether they are land, air, or um, uh, water. And so we really look at solutions, across the board in climate. Of course, with a small fund, our initial fund, there are only so many bets that a fund can take with that level of capital. And so obviously the impetus is to raise additional capital from larger funders and deploy it against the thesis and really operationalize against the thesis. But I think hopefully we're developing that narrative now with some pretty strong companies.
Okay, that's good. Well, tell us about your strongest company.
Oh, well, it's hard to choose a favorite, just
I didn't
like
ask your favorite. I said your
yeah,
strongest.
it's never
I know.
possible, and these things keep changing because
Oh,
um,
yeah. It's
you know,
early stage.
quarterly updates and things like that. I mean, companies have such long lives that we really, I mean, fingers crossed they have such long lives that you really
Yeah.
can't say. I'll call out one company for its high performance at the moment and that we're just very proud of, which is Headlamp Health, and their CEO, Erwin Estabarria, is an incredible leader. So they started out in the mental health space looking with the ability to potentially impact three large pillars in care delivery: payer, provider, and life sciences. And so they've had some really favorable economic headwinds at the company. The firm has at least documented 6 or 7 prevented suicides among some really incredible outcomes. For example, being able to really, in a precise fashion, impact drug delivery or drug discovery so that you can find new subsets of patient populations. You can get pretty specific with these solutions and impact, either niche populations or broad populations that you previously didn't have a drug for, but now you've been able to either leverage a previously distressed asset or you've been able to sort of leverage an existing solution for a new population. So I've been really thrilled all around to see the impact and the growth of this firm.
Okay, well, that's great. So how much are you looking to raise in your next fund?
We haven't identified a target yet, but I think it's probably substantially and double digit higher than
Okay.
what we've gone for now. And this was our pilot fund. We're just looking to grow up.
Okay, well, this is your initial effort, so that's great that you're off the ground and running with it. Okay, let's pause for a moment and ask if anyone has any questions.
Yeah, I have a question. First of all, thank you very much, Urvashi, for your introduction and your insight onto this. But so things have changed a lot, even in at least in building and
Yeah.
doing like POCs and MVPs, because everyone can now build something close to a POC on their own or very quickly. And AI companies and a lot of new companies who are using AI can basically get revenue or at least POCs. But how does it change on the investment side? I know that things like seed strapping is a new thing, and AI just a lot of the companies have early revenue. But it seems like because I've done healthcare hackathons and also climate hackathons, but in some way everyone is an AI company.
Mhm.
But in terms of the usual factors of evaluating early stage startups, it seems like the metrics are different.
Mhm.
So, what's your opinion on this?
Yeah, that's a really great question. So I think, at least for us, I think it has actually, it's interesting you asked this question. So, uh, when I launched the fund, one of our initial pages, and I think it's still in our fund materials, is that whenever there's a really pivotal change economically, there are typically two winners. Those that create the products and processes that are going to redefine the future. And then the second are those that invest in it. And we're the ones that invest in it. And you are obviously a leading thinker that is creating a product or a process that's going to redefine the future. And so to that end, I think like the way we think about it is not so much about chasing after every AI solution. I know that there are incredibly large funds that take those kind of horizontal bets across the board, and those are those are viable theses too, in and of themselves. I mean, I think those economics can be justified. We look for more picks and shovels solutions that are going to potentially outlast a bubble here and there or an interest or a phase here and there. So we've been going back to the basics as it relates to that. I don't I don't believe, or I don't think this fund, everyone that is involved in a diligence or otherwise sourcing, is looking for deals that are an AI company, although I think in this day and age, we can't escape the fact that AI is embedded in every solution. And so we tend to really gravitate towards founders and teams that are leveraging AI in a smart manner within their business models, as opposed to being governed by it and being swept away by the tide. And it's probably easier for me to say because I live in the DC area. Our team is spread all over. We definitely have a West Coast footprint, and we definitely hear about AI all the time, just like everybody else. But it is almost a little bit helpful to be personally removed from it because then you can regress to the mean as it relates to this AI bubble, or maybe
Yeah,
that's not the word we want to use, this AI momentum. It's
right.
a little bit easier to regress to the mean as opposed to being swept away by it.
Okay, thank you very much.
Yep.
Well, here in Silicon Valley, there's a number of people here on the Zoom from Silicon Valley. So we're all just floating around inside this bubble. And we can't see beyond AI. Anyhow, it's good to have people on the East Coast who can. So, all right, tell us about what you're hoping to impact with your fund. What I asked you about the biggest problem you're trying to solve. What's the biggest impact you think you can make?
Yeah, I think for our next fund, one of the biggest impacts we're looking to make is to democratize access to venture capital for every layer of the medical system and really have operators in healthcare have a little bit more of a determining hand, all the way from deal sourcing to being in the investment committee to the deployment of capital, such that we can really see the change that we know that is required on the ground. And so we're looking to, raise capital from individuals that are really, really active in the space, who are otherwise are operators, either like you, Frank, or others that are really working within healthcare to change it, or working with the health, I should say, to change different parts of the system, or from medical doctors and others that are strong advisors in and of themselves and therefore would serve as great advocates for the growth of the fund.
How are you going about sourcing your deals that you're going to invest in? I've attended some of the Yale Ventures meetings where they have pitches.
Mhm.
And is that one of the places where you get some good deal flow? Or just tell us about how you do source deals.
Yeah, so, well, I'll call out Yale Ventures because definitely they're incredible. They have really strong deal flow.
Mhm.
I'll also call out separately Ryan Dings from Climate Haven, and one of the companies that we have looked at in the past, which is Oxalis Energy, and they're firmly in the energy transition space. They're in valorization. It's really incredibly important as it relates to the importance of the work itself. But then it's also really economically viable and a really strong company. And I really believe in the work that they're doing. So I'd like to call them out just for doing an awesome job. But that said, yes, we definitely source deals from the Northeast, from ecosystems such as those, whether they're from university hubs such as Yale or Harvard or others, MIT, all along the East Coast and the West Coast. A lot of our deals come from pre-existing partnerships or really well-known exited founders or really well-known investors that we've had relationships that preceded or predated the existence of this fund. And so we tend to reach out to our network for access to really incredible deals.
Oh, that makes sense, definitely. So you have a West Coast partner. You said you have a team out on the West Coast too. And I noticed you have a partner, an investing partner. So tell us a little bit about your team.
Yeah, so I'll go broadly. So our chief admin and CFO, sorry, CFA is Matt White, and unfortunately he wasn't able to be here today because he had a prior engagement. But he's incredible. He's a really strong accounting and math mind, and keeps us all straight. Then there's Ed Lang, who's our COO. Julian Kahn, our special advisor on the small fund, or our pilot vehicle, and of course we have some really really incredible venture partners. Also, I'll call out Catherine Balsam Schwaber and Alexia, who you know really well, Rebecca, and I'm really grateful for her for the introduction. Richard Castleberry, Dan O'Neill. We just have a really incredible team. Sorry, I also missed out on Matt Frederick. So yeah, we have a really awesome team and source deals from all over.
Okay, how do you manage it all? Because you're young, you have a growing team. I'm sure you have a growing family as well. How do you manage it all?
And just like everyone else on this team does, on this call does, and others, I think, time blocking has been really helpful. Leveraging the village has been really helpful.
Uh-huh.
So, yeah, and I think the nature of venture in of itself is really nice because, there are time blocked phases. There's a raising phase, there's a deployment phase, and so I think there's a natural organization in the whole structure.
I see. It's for me, time blocking, if I tell myself I have 1 hour to do something, and then I say I have 1 hour, I have to finish it, then I get it done. If I say I have a half day, I'll stretch it out to a half day. If I say that something is due
Yeah,
in 2 weeks, I'm not a really, I'm not a procrastinator, thank God, but I know
yeah.
some others who are. But anyhow, time blocking does work. Giving yourself an hour, a shorter period to get something done, I think is a good thing. Um,
Yeah.
as long as you have time to review it later on. Um,
Right, absolutely agree. Yeah. Well, my
okay.
children tend to time block things for me, so I tend to prepare for my windows when I know that
Oh,
I'm going to have some
yeah,
time away from some of the
yeah.
noise and chaos, which they call fun and regular everyday life.
So I liked what you said about putting the fun into funds,
There you
FUN.
go.
Yes. So how are you doing that?
Our team is really awesome. I think we keep each other pretty upbeat. But that said, I think we also like to compete internally. And I remember very, very early on, our COO Ed Lang had said, "Well, since our job is to raise capital, we might as well have some fun doing it." And so we should compete as to within
Oh,
a defined period of time which team member can potentially raise the most capital, you know? And so I want to bring that idea back because we'll obviously be chasing a larger number in the next fund. And so it might be just interesting to create that kind of a friendly competition and reward that person with something,
yeah.
like a vacation or whatever. So this kind of thing. So yeah, so that's I think maybe that's how we're putting internally the fun in fund.
Okay, I like that, the competitive spirit, and you get a reward at the end too.
Mhm. Yeah.
Oh, okay. Anyone else have a question? Hal Kelman, I know you got a curious mind. Come on. What question do you have?
Okay, so you talked about, I think the term bubble came up a couple of times. The problem is if you try to time things, you don't make as much money. And, things take a long time to work out. Do you
Mhm.
not invest? There's a bubble. I'm asking our guest.
You're
Do we
asking if
not
she, if,
invest because it's a bubble? Is that what you said?
Yes, prices are crazy high now, but just like Alan Greenspan said in 1996, we're in irrational times, but it went on for another
Right.
4 years. So, you have to invest money. Are you just not investing or being more cautious right now?
Yeah. Well, I think it's interesting. So like, well, one is I think private markets do naturally offer a buffer against public market volatility. So I think the beta is just lower just because of the very nature of the business. So I think individuals that are looking to diversify and hedge the risk a little bit against public markets are finding private markets and particularly early equities to be a little bit of a de-risking strategy. To that end, actually, about 37% of our pilot vehicle is IRAs. So it's been really interesting to see that strategy come up. Apart from, just that correlation factor being low, there are categories where we're seeing capital flow a little bit more. just because I think it's the nature of probably healthcare in and of itself is that, fortunately or unfortunately, we're all humans. We are all aging. We are all going to require healthcare in some form or fashion at some point. And so investing in these solutions makes an incredible amount of sense. So I think it's just really about where to take those bets. And I would say it's less about timing the market and more about looking at every individual company that we're looking at within categories to see who has the ability to graduate in a certain amount of time, which company is probably going to have their next round come together a little bit more easily just because they might be in a favorable category, or
Mhm.
maybe they have some customers that are looking to land and expand. I mean, every company will have its own unique unfair advantage, and we try to assess those factors as opposed to timing the market.
I do like
Thank you.
that question, though, Hal. I think it's a good
Yeah.
question about whether you should continue to invest in an aggressive way or pull back a little bit because of valuations being so high. But you have to continue to invest, but you have to figure out what your strategy is. I like your question.
Yeah, absolutely. And also, yeah, I mean, it's a fair point. If the valuations are super high, then to pull back. I don't believe in really being out of the market just for that reason.
Mhm.
There are pockets in the market where there are deals that make an incredible amount of sense. I mean, the whole reason venture or early equities exists is because we're trying to prove that the market is mispriced in a certain area. And we took that bet with mental health, for example, and we saw a real acceleration with Headlamp. And so I
Uh,
think there are areas where it makes an incredible amount of sense to invest because of the mispricing, and we just have to be wise about it, about the distribution strategy, the milestone-based payments. Maybe that's another way to safeguard investor capital, de-risking the portfolio in one way or another. Those things can all really help.
would you say that mental health investing gets overlooked?
I mean, does it?
It does. I mean, it does in
Yeah.
society. I mean, if somebody's mentally ill, we tend to cast them aside, right?
Yeah, I mean, I think definitely in the past, there's a lot of data to show that mental health services are really, really, uh, there's a dearth of services, whichever service line you look at. So I think there's a lot of really important work going on in the category. And yeah, and we, had a mandate to be able to take a bet in that space. And so, we were just looking for the right deal. But like that, I think there are a lot of categories that are mispriced, that are important, where the markup could be significant with a small amount of capital deployment. And it's the onus is on us as investors, all of us, to take those bets.
Okay, very interesting. So you mentioned that you had worked in some corporate roles as too. Can you share any of the names of corporations that you might be partnering with today on ideas or any other initiative?
Yeah. Well, I mean, I can't really share the name of my clients when I was at previous consulting organizations, although I did work at PwC and EY. And then after that, I went down to Genpact, which is another public organization. So I'm not able to share the names of my clients, but that said, I will say that a lot of the executives I either worked with or partnered with, have been really great colleagues, whether some of them have come into the fund. We have had two retired PwC partners come into the fund. We've reached out to other EY partners and members that really see a great value in what we're doing. And so it's actually turned into a really interesting LP sourcing strategy
Okay, yeah,
because they are strategic investors. I mean, these companies are just petri dishes of
yeah,
strategic investors, with the capability to add so much more beyond the check than the average investor. And so, yeah, so I think that has been really valuable. And then clients have otherwise served as ecosystem partners, if not now, then in the future. So because it's our pilot fund, a lot of this has been laying the groundwork, but hopefully we'll be able to announce those kind of things in the future.
Okay, sounds good. Are you investing mainly in the US then, or anything outside the country?
Yeah, so we've invested mainly in the US. We've been looking at a couple of deals outside the US, particularly in the sports tech space.
Uh-huh.
Um, and the company that I'm thinking of is really interesting. I mean, they're again between categories because it spans sports, med tech, and mental health. And also gets into like the youth mental health data kind of space. So there's some really interesting work going on globally in various categories. And we're looking at that for our pilot vehicle as well.
Okay, that's excellent. Any other questions before we begin to wrap up, or would you like to make any other comments about what we've been talking about or something we didn't cover?
I'm curious if anyone has any questions. I'd love to respond to any
Yeah.
last questions.
Okay.
Yeah, I do have a last question. So, one, since you're in Northern Virginia, and two, since you're basically investing in very regulated industries, do you think the country is going more towards more regulations, including things like not only just like data privacy, but also things like even cybersecurity? Or do you think
Hmm.
we're, because of this administration, we might be going to more deregulation?
Hmm. Yeah. Yeah, I mean, I've seen that in biotech. So actually, we were looking at a diagnostics company, and it's a really interesting company. There were two companies that we were looking at in the diagnostic space, and one of them actually ended up commercializing very quickly through the LDT route, which was traditionally just not a route that biotech companies took because there's such a great there's so much that comes by way of an FDA clearance that I mean, just the regulatory approval in of itself, but like other things that fall into place as a company commercializes. So I think founders and founding teams were previously very, very focused on. I use the FDA regulation as a mere example. I know you cited like quantum and cyber and those kind of things. I'm personally less familiar with that space. Our team is far better at that evaluation than I personally am. But I'll speak to things like FDA. I'm seeing a lot more creative commercialization strategies where companies either leverage the LDT route or they choose to commercialize outside and then come in and then leverage the United States as a secondary beachhead market. So
Mm,
and that could be a way to like hedge, and see how the regulatory environment plays out. And while these decisions are being made, these companies can still commercialize and become revenue positive. So those are some of the things that I'm seeing.
okay, thank you.
Yeah.
Well, great. Well, we wish you a lot of
Rebecca,
luck.
one question, if I
Yes,
may.
sure.
Yeah, sorry, I had to run to something, so I'm afraid I missed a good deal of the presentation. But talking about investing in tech overseas, I'm wondering if you view Europe in particular as being lower valuations in general on the tech side. And if so, what kind of reaction does that cause for you?
Yeah. I mean, historically, I will say that valuations across Europe have been lower than the United States. So I think at a metadata level, like that's just something that we've seen for a while. But one of the things that I think is often overlooked by investors that we should probably pay more attention to is the fact that it's really not about the valuation of itself as so much as is this a strong company? Can it return capital? And if you're getting a markup and if you're able to have line of sight to an exit from your portfolio, or you're able to build in methods to lock in your markup, then those companies are equally attractive, which is why I was talking about that sports tech company for exactly that reason. So yes, valuations are important, but they're just one factor that I think needs to be looked at.
Yep, thank you.
Yep, thank you.
Okay. Well, this has been great. Thank you so much, everyone, for sharing. Really appreciate it. And as I said before, we have a couple other shows coming up, so hopefully you'll join us for the future. And the future is coming up very soon. In fact, on Monday, we have our next Ask a VC show, August 24th, 4 p.m. from Hong Kong. And then, as I mentioned, we have our live show in New York. I shouldn't call it a show, it's an event. It's live in person with two speakers, September 9. And October 14th is another live event, but that one is in San Francisco. And hopefully all of you will support us by becoming members and checking out my books. And I want to thank everyone for joining us today. Really appreciate it. And I hope to see you on Monday. And I'm going to stop the recording now. Thank you again. I really appreciate your time. Urvi is really excellent. I learned a lot. And we wish you the best with your next fund. Thank you.
Thank you. Thank you, everybody. It's been great to be here. Thanks so much.
Okay. All
Thank you
right.
very much. Bye.
Okay.
Bye.
Bye-bye.